What's going on, guys? So today we're going to be talking about how I try to find bottoms in the market. So stick around to the end of the video. But first, we're going to do a quick sponsorship message from Coin Market Manager. So as you know, I have been sponsored by Coin Market Manager, a really helpful analytical tool that journals your trades for you. You just connect your exchange account via read-only API. So this is a sub account that I have on Femex. It's not my main account, so it's not totally reflective of, obviously you can see this is from January 31st. So this is not very reflective of my actual trading activity, but it's a decent kind of reflection. It's still more or less the same gist, and just this alone has really helped me just get some insight. So just quickly to cover some things with you guys on this little sub account: 10 trades, 7 wins, 3 losses. Something that I found really interesting was the times that I'm winning. Obviously, I'm only a long only trader, so I don't take any shorts. So that's pretty typical. But the times that I'm winning, I'm in the trade for almost 2 weeks. And the times that I'm losing, I'm only in the trade for less than 12 hours, right? So obviously, this is a really small sample size and it's a sub account, but more or less, this is pretty eye opening. It kind of allows me to infer that when I'm wrong, I should know when I'm wrong within, a relatively short period of time. And, the longer that the trade goes on, because I'm a higher time frame trader, typically that means that I'm watching as that trade continues to play out with me in it. So that's something that I found really interesting. And personally, that's going to allow me to justify cutting positions quicker, especially in the beginning of the trade. If I enter a trade and I know that something's not going the right way or how I expected it to go within the first, 12 hours or a day within entering that trade, because again, I am a higher time frame trader, I can really justify cutting those positions a lot quicker. So that's just a little neat thing that I found personally that I wanted to share with you guys. Definitely check out Coin Market Manager. They have a lot of data here, as you can see. And obviously, when you have more data and more sample size, this is going to help you a lot more. You'll be able to observe what your true habits are, but just consider this a taste of what value Coin Market Manager can provide. So if you guys do want to check out Coin Market Manager, you do get 40% off, I believe, for using the link that's in my description. So appreciate you guys. Back to the video. All right, so the main topic of today's video is going to be, finding bottoms. Everyone loves to buy the dip, buy the dip, buy the dip. The issue is that this is not a dip the same way that something like all of this was, right? And the way that I like to break that down is by what I call trend portrayals. All that really means is I'm trying to find the line of best fit that portrays whatever the higher time frame structure is doing, because these moving averages, which are what I'm using, the 200 MA, 200 EMA, are lagging indicators, right? So if I'm using something like 200 daily moving averages, you can see that they're not all that relevant, right? If you're sitting here waiting for 200 dailies, you're just having fun doing nothing and missing out on the rally that entire period. So this is more or less going to portray like a weekly trend. So when we zoom out to the weekly, we can see the structure, right? And that structure typically is going to be along these 200 daily moving averages. So it's the same thing when we zoom in. And all of this is very important to the idea of finding bottoms, at least in my trend trading system. So just bear with me. So that's the idea, right? It's a concept. Typically, if we're looking at hourly 200s, then that's going to portray something like our 4-hour market structure. So the trend on the 4-hour chart. So quick, let's just go to the hourly time frame. You can see, hourly 200 moving averages. And then when you zoom back out and you assess your 4-hour market structure, you're going to see high, low, high, low, high, low, right? More or less. So this is what I call trend portrayals. The way that we're portraying the idea that, the 4-hour market structure is bullish and we're uptrending is because we're finding support along hourly 200 moving averages. So when we're doing something like that, and the context is, right, so this is also pretty important. The context is, in this leg upwards, we are uptrending on all time frames. There's not really, we have resistances overhead, but there's nothing that's really downtrending, or at least nothing that really allows us to assume that we would be downtrending. So we're bullish on every time frame. That's the same gist here too. So that leg upwards, we're bullish on every time frame. We're bullish on every time frame. So it's very straightforward. It's clear. It's not, oh my gosh, we're sideways on this time frame, we're downtrending on this one, we're uptrending on this one. There's not really too much context as it is today, so we'll get into that. It's just, hey, we're going up only, right? Up only on every single time frame. So whenever that's the case, the context for things is very easy. So when you're buying the dip along a local trend, you are actually buying a dip. This is a dip. That's a dip, right? This is a 3% range. And then from that 3%, you test your hourly 200s, you test the support level, you dip, right? And then what happens? You immediately resume the trend. You get that negative 10% dip, right? You wash out some of that leverage, you retest that trend, you retest that support level. What happens? You continue the trend. Dip, 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 right? And then the trend breaks. Suddenly you're not buying a dip. You are now buying a pullback, right? So that's how and it's all semantics, but that's how I'm breaking it down, right? Just having a way of making those clear-cut definitions for what we're calling things is going to allow you to break it down in your head and then digest it to your gut so that you actually have an idea of what is it that I'm actually doing. And if you know what you're doing, then you can skew your strategy along, in tandem with that. So that should be immediately right off the bat providing you more value. All right, so we're going to discuss what a dip is. Now, when we lose that local trend per trail, right? So we're attaching these arbitrary definitions to my trading system. We have local trend, we have high time frame trend, we have dip, pullback, right? That kind of stuff. When we lose that local trend, those hourly 200s, now I'm looking for a deeper pullback. So that is higher time frame retests, right? Something like 4-hour 200 moving averages. So you can see access support sometimes on this rally upwards on a higher time frame. It's also what allowed us to see a drastically deeper drop, much bigger than anything we were able to see on this entire, 2-month or 3-month period. So losing those 4-hour 200s was pretty significant. Obviously, reclaiming those 4-hour 200s was also significant. That was the high time frame trend shift. So we were reclaiming a key trend. And obviously, if you wanted to create a snowman, you'd have to build a snowball first. So in order to test these 4-hour 200s, you have to lose that local trend per trail. So once we lose that local trend, my immediate assumption is we're probably going to retest the higher time frame trend. And we do. It works out very nicely that time. It's not always that butterflies and rainbows and dandelions, but when it works beautifully, and man, does it feel good. So I'm allowed to come in and buy this pullback, right? We're testing a higher time frame trend, and that is a bottom. I refrain from buying the dip here and buying the dip there and buying the dip there and buying the dip, right? I refrain from doing that, and I only take action at what I'm deeming an inflection point. So all that really means is a region where I can scale the assumptions to a greater degree on either side. So if we hold that region, then I can assume much more bullish arguments on the way, the same way that I have been for that entire rally. And if we lose that region, now all of a sudden we're creating even more significant bearish arguments, and I can start to assume that in the inverse direction as well, right? So it's an inflection point. It's important region regardless of direction. It's probably going to allow us to infer the scale, the drama of the direction to a greater degree than what we previously had, right? So that's the difference between something like a pullback and a dip. Now here we get into a downtrend. Once we've lost that inflection point, you're not buying a dip anymore. And I'm not saying that you're not allowed to buy downtrends. If that were the case, then the market wouldn't exist, right? So I need you to be buying downtrends. Actually, thank you for stepping in front of the trend, because somebody has to do it so that the trend can get reclaimed so that I can come in and start trading again. But when we start downtrending, you have to be able to recognize, hey, this time is obviously different than all of these times. So that might mean that the environment is a bit different. So don't go expecting the next negative 2% drop to be immediately retraced the same way that it was for a large portion of the past 2 months as we rally 75% or so. When we get different results, we're going to expand our thinking for different outcomes, right? So we might be able to see even bigger drops, breaking of support levels, right? Shifts of structure, drastically deeper pullbacks, right? So that's just it. I'm not a buyer during downtrends. I don't really care to be buying, the dip on the way into the support level. Even I go as far as to say, I don't care to be buying the support level at all, because that's not my inflection point. In my head, this is just a support level. The 60K region, support is support. Cool. If you're going to step in and try and catch the knife, it probably makes sense to do that at a support level. If you're going to take profit on your shorts, it probably makes sense to do that at a support level. If you're going to dollar cost average into Bitcoin over the course of the next 5 years, it probably makes sense to do that at a support level. But that's not the region that I'm really interested in. I don't care to be trading supports. I want to trade trends. I'm a trend trader, not a support level trader. So I'm able to catch bottoms, quote unquote, when we test higher time frame trend portrayals, right? When we test inflection points, but I'm not catching this bottom. Let me break it down to you. There's Investor Mercury, there's Trader Mercury, and then there's Degen Scalp Trader Mercury. So as you saw, that little Femex account for Coin Market Manager, that was kind of my dabble account. So I might be taking a position here, position there. But for the most part, my main account is not really interested in these regions. I might be able to catch a nice scalp. I might be able to hold a position for a nice period of time because we might be overextended in the short term, but that's not where I thrive. That's not where I make the bulk majority of my money in markets. So even if I have a good trade on that account or that approach to the market, it's not like I'm calling home to mommy to let her know that I caught a bounce. Right? It's just a bounce. It's a support level. It is what it is. In order to test that support level, we had to break through several support levels to get to that one. So how do I know that this one is any more significant than any of the prior ones that we broke down to get here in the first place? And my honest answer is I don't. So for me, I'm able to justify looking past this region. And I understand that when you look at this chart, you're able to say, yeah, Mercury, but relatively we're going sideways, right? So this is a range low, isn't that? Shouldn't I be buying the range low? That's totally fine. If that's how you see it and that's how you want to approach it, again, thank you for trading that way because the market would not exist if you agreed with my thoughts to 100% degree. But for me, my trend style analysis and my trend trading system was applicable since here all the way into here. The entire way through, we are at least making higher lows on our daily market structure. 4-hour 200s are allowing us to portray that idea. We never broke that trend. So I continue to make that bullish analysis. I continue to be an uptrend trader, right? And truthfully, a lot of the altcoins in the market rewarded me for that way of thinking. Good thing I maintained those positions for that extra, last little burst as they made higher highs. And we'll get into that in a minute. So once that trend analysis breaks, I don't go into a range trader's mindset. I only do that if the trend gets chopped up enough. So the way that I'm seeing it, I'm still allowed to say that this is a downtrend because when I assess this structure, this is a high, but that's a lower low, and this is now a lower high. So what am I expecting here? A lower low. Regardless of the fact that anyone and their grandmother can look at this chart and say, relatively, we are headed sideways. That's totally fine. This is just not the inflection point that I really care about. So what is then? In order to justify buying a downtrend on a much higher time frame, I have to zoom out to a much higher time frame than that one. So this is what I'm going to call a very high time frame inflection point. So that would be, for me, 200 daily moving averages along with this 52K demand zone. So if and when we get to this region, I'm totally fine with stepping in front of the train, the downtrend on that time frame, because I'm able to recognize when I zoom out to a drastically higher time frame, we're still uptrending. So this analysis is largely the foundation to any analysis underneath it, right? Anything underneath it is going to be more detailed and obviously more actionable. I can still navigate, 70% movements or negative 30% drops, that kind of stuff. But this is the environment that we're in. So I'm allowed to say we're still in a bull market. It's just that I don't really care that we're still in a bull market because we have, upon high time frame trend loss and into high time frame trend retest, is negative 25% gap. And some of you might say, oh, that's nothing. You're a battle hardened veteran. You've been in crypto for a long time. Negative 25% is not a big deal. And actually, I would even agree. But when you're trading altcoins, a lot of these altcoins are already down negative 50%. If BTC pulls back to 52K, which per my analysis is not that unfathomable, then those altcoins are going to get absolutely destroyed, at least from their recent highs. That's not fun. I definitely want to mitigate negative 50%, negative 70% drawdowns if possible, obviously. So this kind of method and way of thinking, segregating time frames and calling dips because they're on a lower time frame, and I can portray it that way, and then having, an arbitrary definition for a pullback, something that is only visible on a higher time frame, and then knowing when it's time to take that bet and step in front of that train on a higher time frame at a very high time frame inflection point. That's how I'm going to go about buying bottoms, right? In a bear market, though, I'm not really a bottom buyer. For a lot of this downtrend, even this bounce, I'm just chilling on the sideline. I don't have any FOMO. I don't have any fear of, oh my gosh, what if the rally, kickstarts without me and that was it? I don't have that. It doesn't exist, because the same methodology that allows me to adapt to the new trend in the market here is the same methodology that's paying off here and here too, even after we bounce 25% from the low. So it's not really the end of the world. There's no urgency, there's no desperation to make it in that 25% bounce. Truthfully, if you want me to be honest with you, I know lots of bottom buyers. I know lots of them. Every single time that the market bottoms, there are 1.5 million people buying that bottom. So the bear market lows back here are a great example. I know a lot of people who bought the capitulation, had an entry point on Bitcoin with a 15 handle, right? They bought $15,000 Bitcoin, more or less, somewhere in that region. I know so many people who bought those lows. However, I don't know many people that managed to actually hold that position for the span of 2 months as we chopped sideways in a 10% range. So that is to say that bottom buying is mostly a fruitless labor, at least the way that I perceive it. The only way that I could really imagine it being fruitful for anybody is if you already have 10 plus years of experience in markets and in trading, and you're able to say that your thoughts actually are alpha. You can look at what the market is doing and say, you know what, I think this is a bit over exaggerated. I'm going to start to dabble and probe against the trend. So now you're getting into George Soros quotes, right? Probe against the trend if I believe it's been played out to excess, that kind of stuff. That's not anything that we need to worry about right now, because again, we're still in a bull market. So any high time frame bottom, I would imagine, would be put in around a high time frame inflection point. So maybe you could argue 60K support level as a range low, or 200 dailies, something along those lines. You can see even back here when we lost the 200 daily moving averages, we held this range low, right, which is a previous range high. And then we immediately reclaimed that trend, right, along with 4-hour 200 moving averages. And we shift the trend right back bullishly. We get that momentum swinging towards the upside direction again. So that's pretty much the gist. Just know what you're doing if you're going to be doing something, if you are going to be buying 60K, or if you're going to be trying to catch a knife on Solana, or whatever it may be. At least acknowledge that you are catching a knife. The worst thing, honestly, is not whether or not you're stepping in front of the train, it's whether or not you know what you're doing. A lot of people are delusional in markets and convince themselves that, oh no, we're still in a bull market, so I'm going to buy the dip here, even though the idea that they're still in a bull market doesn't get invalidated for another negative 20% lower. So you're not actually playing into that idea, because that context isn't very relevant at that time. A lot can happen in between that negative 20% or so, right? And again, I'm just throwing numbers out there. But people convince themselves that, oh, this is what I'm doing because this is what's happening on a higher time frame. That might be true, but that's not what's relevant to you on that 5-minute candlestick as you're buying that downtrend. So you have to know, am I buying a dip? Am I buying a pullback? Am I buying a downtrend? And I would imagine if you're able to objectively define what it is that you're doing, you would probably skew your approach to doing that execution, that button press, you would skew it differently, right? So something simple like, hey, I'm just gonna go in with small size. Something that simple, right? Or, oh, I'm gonna ladder bids in this region. Whatever it may be, whatever your approach is. But I would imagine if you know that you're stepping in front of a train, you would approach as though you are aware you're stepping in front of a train. That's the only thing that makes sense, right? So this is the gist on the Bitcoin time frame, and that's my analysis more or less. Really quick, let me just give you another example, something that honestly gets the idea across a lot better, and that would be something like Solana. So for a long period here, Solana's uptrending along 4-hour 200 moving averages, and also finding higher highs and higher lows in the daily market structure. So eventually we lose those 4-hour 200s. We put in a lower high. We then follow through with a lower low. So if we extrapolate this, yep, that's a downtrend. And that's the first time that we've seen that in an entire 2-month-long rally after rallying 120% upon the reclaim. That's not even from the actual bottom itself. So immediately when I see that weakness come into the market, we're also losing these range lows. I forgot to mention that too. But when I see that weakness come into the market, it is obviously a much greater scale because that's when we're putting in that lower low in the daily. We have not done that this entire rally upwards. We've not traded below the 4-hour 200s. Obviously, if you're only zoomed in on this 1 month area, and we have not broken down below these range lows. So immediately upon doing that, I'm allowed to zoom out. I'm not really buying a dip anymore on Solana. I'm buying a downtrend. If I decide to step in front of the train, I'm not buying a dip, right? And if I buy this support level, I might be buying a support level, but there's also a support level here too. And there's probably one here too. And so you have to be aware that that's exactly what you're doing. You're buying a support because it's support, but you're not buying an uptrend. You're not buying the dip. The time to buy dips is when we're uptrending along a very low time frame trend and it looks something along those lines. That's a dip. That's a dip. Those are only visible on something like the 15-minute time frame. That's the only period of which you can actually see these little tiny pullbacks before moving 15-20% higher. So those are dips. Losing that trend would probably allow for a deeper pullback into your higher time frame trend. Losing the high time frame trend constitutes us calling that a downtrend now. So now we're giving ourselves context to work with. When we zoom back out to a higher time frame, we can determine an inflection point for Solana, something that has been historically relevant for Solana's entire existence. And that region would be these 200 daily moving averages, along with we even have confluence in a support level around $110. So if Solana gets to this $110, $100 region, I can tell myself, yeah, I'm buying a downtrend on this time frame, but I'm still buying into an uptrending asset on this time frame, and I'm buying the inflection point. Either Solana holds this region and we can resume the bull market rally, or if we lose this region, that's not looking too great. And I can continuously scale along with the time frame itself, and I can give myself a very objective analysis to ebb and flow with at any given time. Now, I know a lot of you are going to ask, hey, but what if we never get to that region? What if we front run your bids? What if, right? And that's totally fine. And to that, I say, if you ever wanted to build a snowman and you wanted to see Solana go to $1,000 and be the Ethereum killer or whatever you want, what do you have to do first? Well, you have to put in a higher high in the daily. In order to put in a higher high in the daily, you have to reclaim your 4-hour 200 moving averages. So that would probably look something along these lines. In order to reclaim your 4-hour 200 moving averages, you have to reclaim your local trend, your hourly 200 moving averages. In order to reclaim your hourly 200 moving averages, you have to reclaim, and we continue that analysis. We keep it going as long as it's applicable. We can scale it to whatever degree that you're comfortable trading. We can ebb and flow along with markets rather than be reliant on something on a much greater time frame and then be very unpleasantly surprised when a bottom is not found on that time frame. What that does is you're inviting inactionable analysis. You're allowing yourself to be paralyzed by the market. You're being reliant on the idea and the fact that we're still in a bull market, and if you zoom out on a much higher time frame, we can portray that idea. We're still holding higher lows in the weekly, stuff like that, but you are relying on that to be the case, and if it isn't, you are going to get absolutely destroyed. That is an inevitability. And I was saying that at these lows, for every bull market, there's a bear market. For every bear market, there's a bull market. At the lows, I was saying human greed still exists. We have to remind ourselves of that. It's not like just because price went lower that nobody's going to want to play the game anymore. And it's the same thing now, just inverse. Now everybody wants to play the game. We're really in the era of greed and euphoria. We have to remind ourselves that fear didn't just go away. Eventually, we will enter a bear market. You have to have an actionable way of approaching the market so that you're not reliant on drastically higher timeframes to be maintained in order to succeed. Otherwise, you're basically an investor and you're just convincing yourself that you're a trader. And if that's the case, you're constantly going to be in this state of limbo where every time the market goes up, you're a shitty investor that isn't invested enough. And every time the market goes down, you're a shitty trader because you didn't hedge enough. And that's not really a good way to live. That invites a lot of paranoia and anxiety, and I've been there before, and it's really honestly just very torturous. So this is my methodology of trying to find bottoms and how I dictate what is a pullback, what's a downtrend, how can I look for much higher time frame bottoms, and how can I give myself some kind of comfort and relief in the meantime, just in case we never even get to those regions in the first place. So I really hope you guys found this video informative. Just so you know, I am doing a Bybit giveaway, and I will be giving away an iPhone 15. And all you have to do is submit the Google form that's in the description below. Additionally, if you are on my Bybit or my Femex referral links, you will get access to my private Discord. And in that private Discord, we host live streams 3 times a week. Those live streams usually drag on for 2 or 3 hours, by the way. So there's tons of content for you to study from. I also post my trade ideas in those channels, and I talk about my top picks in the altcoin market every single week. So if you are interested in joining that private Discord, all you have to do is register and trade on the Bybit or Femex referral links, also in the description below. I hope you enjoyed the video. Much love, and take it easy.